We have CVS quitting smoking cold turkey, Merck reported fourth quarter results, and we're going to tackle the CBO report on Obamacare. This is your market checkup. Hi everyone, welcome back to Market Checkup, and we have Max Macaluso joining us today. The doctor is in. And it's great to have you, Max. It's been a bit of a sad trombone without you here on the show.
Yeah, thanks. I'm back. I'm ready to look at some winners and losers. So let's start there.
Yeah, we have a bunch of winners over the last couple of days. Pernix was up 70%. They hired a new CEO. They secured $65 million in funding. They're settling a legal matter. Certainly, that cash came at a good time. They only had about $10 million on hand, so it's always good to have a little bit of a cushion. Myriad Genetics was up 15% the other day. They had a nice fiscal second quarter results. They're not on a calendar year, so it can be a little confusing for investors. But net income soared 40%. Sales increased by $55 million to $204 million. We see Repros is up 15% today. This is after positive meetings with the FDA regarding androxyl, its testosterone replacement drug. Investors are cheering. They don't think Repros will have to run additional tests now. And finally, we have OraSure, which is up 10% on strong earnings. Revenue was up 30% to $28.8 million.
Right, but David, OraSure continues to be probably my worst caps call ever. If you play Motley full caps, you know what I'm talking about.
And everyone should.
I agree. Yeah. Shares were flying high about a year and a half ago when the company was just about to launch its at-home HIV testing kit, which I continue to believe is great for public health. It's another option for folks to get tested, and it's playing along with an emerging trend in healthcare, but there just wasn't that much demand for it, and after investing so much in the commercial launch, sales didn't really pick up. So I think shares are kind of rebounding a little bit, but I see more compelling growth elsewhere on the market.
Mm-hmm. Of those, if one stands out to me, it was Myriad Genetics, because they obviously lost the patent issue. They have the breast cancer diagnostic test for the BRCA1 and 2. But they've done what appears to be a pretty good job holding off competitors. They're still continuing to grow. They made an acquisition. It'll be more accretive down the road, probably not till 2016, but I think that's interesting. I don't particularly enjoy the overhang of them losing their patents, but really they seem to be doing well on a business case, so that stood out to me as well.
Right, David, let's move on to the unhappy market, the losers today.
And unfortunately, we have a bunch of those, and really I want to highlight Intermune, which has not been a winner in a while. It was down 10% yesterday. It's down a little bit today as well. It's actually down 22% over the last 5 trading sessions. It hasn't had a single positive day. Investors are really concerned about competition from Boehringer Ingelheim over its IPF, which is idiopathic pulmonary fibrosis. Intermune sells Esbriet, but unfortunately there could be competition coming. We have Enanta, which is down 10%. Unfortunately, it got caught up, I think, in some of the bull case for Gilead's hepatitis C drug. Enanta gets royalties from AbbVie, or at least it will if and when AbbVie's drug is approved. But there are some concerns about how much Gilead is going to dominate that market. And there was some data that potentially came out slightly negative for AbbVie's drug, but I don't think it was too big a deal. We also have GW Pharmaceuticals, which is down 7%. It did report earnings the other day, but it actually has been up about 14% this week. So,
right. Yeah, I think GW is a pretty interesting story. I'm going to be digging into it for an upcoming story, and I think part of the run has been some optimism over medical marijuana, but the company actually does research in the cannabinoid system, which cannabis or marijuana actually modulates. So there could be some confusion there on the market. I have to dig into the earnings report a little bit more to tease out the actual value of the stock. And Enanta is also another incredible story you've touched on that is only going to get more exciting as the year goes on, and that has to do with AbbVie's drug, which a lot of people expect to get FDA approval, and Gilead's drug Sovaldi, which is already approved for 2 genotypes, but approval for genotype 1, which is the most common form of hepatitis C, should be coming later this year.
Yeah, we've seen a slightly higher breakthrough rate for AbbVie's drug, but the cure rates are both in the 90%, and if you don't work on one, you can try the other. I do think there will be a bit of a price war here. Obviously, right. Gilead's gotten some pushback for how high they've priced Sovaldi. AbbVie has a chance to undercut them. I think they'll have to, given the different dosing regimen.
Well, I was going to say dosing is something else investors definitely have to consider here, because Sovaldi is just, it's easier for patients to take.
Yep, but so those are our losers.
Yep.
Not too bad. I will say, investors, I think, excited just about looking for places to invest in marijuana stocks have probably bid up GW. It's up, like 500% over the last 6 months, but it actually doesn't need to be legalized for them to be able to sell their products. So.
Exactly.
Completely different can of worms. All right, so let's move on to the headline segment. We have some really good headlines for you. Merck reported fourth quarter results. They did miss expectations. They did announce.
Well, I mean, it was a little short of expectations.
That's true. Revenue fell 4%. Earnings missed by a penny.
A penny.
So not too bad.
Yeah.
It came in at 88 cents.
Well, a penny per share.
Yes, that's true. That's true. It wasn't just a single penny.
Right.
And Januvia, Merck's really, I think, made a big push to try to, shore that up. It did decline, unfortunately, but overall, diabetes sales grew thanks to Janumet. So we did see some stabilization there.
And Dave, I was impressed with the announcement of some trials that will start with Pfizer, Amgen, and Incyte. I think these partnerships are important. This, of course, has to do with Merck's PD-1 drug, which we saw what happened to Bristol Myers Squibb last year. Its valuation soared based on the potential of this compound, and Merck has one in the same kind of drug class. So I think it's very promising, and I'm curious what these combinations are going to do for patients.
Yeah, it's sort of interesting to me what's happening, and I think this was really the bright side of their report. That, and I would say probably revenue for guidance for this year wasn't necessarily as bad as some people were fearing, given what Merck is facing. But I really like these immuno-oncology partnerships. I remember when I got the press release in my inbox, though, the one that surprised me the most was Amgen's, because they're combining it up with T-VEC in melanoma. T-VEC, of course, is the modified herpes virus that's injected right into the melanoma site, but it does seem to have effects in surrounding melanoma lesions. So it'll be interesting to see their completely different mechanisms of action. The other two drugs or combinations are more on the immuno-oncology path line. Incyte has one, Pfizer has an experimental one. They're also going to combine it with Enanta as well in different trials. So I think that's going to be the real driver. Merck really looks like it's going to be a big player in immuno-oncology in a way that I think maybe not a lot of people in the investing community on Wall Street were appreciating until more recently. Merck's pipeline isn't completely devoid of interesting things either.
I think they had a pretty tough 2013 in terms of approvals. They just didn't get a lot of new products on the market. Despite that, their stock actually performed fairly well considering all the setbacks they faced, and probably a lot of that has to do with investors looking for yield. But strategically, I think the company is moving in the right direction. Vaccines and oncology seems to be a new focus. There are some rumors that they may acquire Novartis's animal health division, which could provide some stability there. Some speculation that they're setting up a spin out, kind of like what Pfizer did with Zoetis,
which I think could be smart.
It could be smart, but it's a little too early to think in those terms, right? But I think if all of their moves are executed correctly over the next few years, this could be the start of kind of an innovation renaissance for Merck. It's still a little bit too early for me to put my renaissance stamp on this company, but I like the early moves I'm seeing here, and I think they're positioned well for a good year.
And we should get Odana results this year, and then
which we expected last year.
They're keeping us in bated breath with anticipation. And they have that Alzheimer's drug, the BACE inhibitor as well. Eli Lilly had problems with theirs, but they said that was a Eli Lilly specific problem, not a class thing. So it'll be interesting to see how this one does, because it's one of the more further ones that are in development. So, all right, let's move on to our next headline, which is CVS, and it looks like it is quitting smoking cold turkey. But like a lot of smokers, it's quitting in October. So big lead-in. Maybe they're gonna chain smoke all the way up until they quit, just to try to get it out of their system. But they'll be eliminating cigarettes and tobacco products from their stores.
Yeah, and I was just looking over a few of CVS's older press releases, and at the section where it says about CVS, here's a quote: "CVS Caremark is dedicated to helping people on their path to better health as the largest integrated pharmacy company in the United States." If that's their mission statement, then this move makes all the sense in the world, right? I mean, they're really becoming more integrated. They have the retail pharmacies that most consumers are familiar with.
Yep.
They also have a pharmacy benefit management service that I think a lot of consumers may not be aware of, but investors definitely are.
Yep. And Caremark, I mean, it's that and Express Scripts are the dominant players, and really it's an oligopoly when you throw in Catamaran, but that's about it.
Right. And then they have the walk-in clinics, which are emerging as kind of a new trend now. So I think if they're trying to provide healthcare and at the same time selling drugs that treat things like cardiovascular disorders and other diseases or problems caused by smoking, I think it makes sense to get rid of these.
Well, and sometimes you have to put it in perspective too, because $2 billion, is what they said that they make in tobacco sales, and that's not an insignificant number. At least certainly not to you and me, and it's not
even to CVS.
But it's not as bad when you compare it to their whole revenue picture. It's also a lower margin item, so cigarettes get pretty prime shelf placement, so hopefully they can replace it with something that's higher margin. But over the grand scheme of things, you're right. They're shifting just from sort of a retailer that sells pharmaceuticals to a wellness business in a lot of ways. They've been really aggressive about expanding their minute clinics. They're up to about 700, and I think this is really the future with the Affordable Care Act coming in and giving a lot more people insurance. CVS is primed to sort of dominate that market. Not everyone has a primary care physician or cares to go to one, or maybe you can't even get in to see one in an emergency. I think it's smart. It's interesting because it's hard to pitch yourself as that and then at the same time be like, oh, come for your medicine and here's a pack of cigarettes, So I think brand-wise that makes sense. In the short term, it's going to be a boost to Rite Aid and Walgreens unless they feel pressure to follow suit,
right.
Because they will get those sales. I think people are pretty agnostic about where they buy their cigarettes.
Yeah, I know I am. I'm kidding. I don't smoke, but I really don't.
Yeah.
I think a lot of consumers are like me. They don't really care where they shop in terms of pharmacies, right?
But if you have a clinic you prefer going to, that creates a stickier relationship. So I think in the long term, CVS is making the right call. In the short term, might get a little choppy, but that might actually give long-term investors a chance to get in at a good price.
Right. A note for investors: earnings will be reported February 11th for CVS, so that'll be the next catalyst for the stock. Very important. I know we'll be listening and digesting those results.
Yeah, it should be a pretty good call. Looking forward to that. All right, so let's move on to our game segment. It's one of your favorite games. We're going to be myth busting. We got two myths out there. We had this big CBO report come out and really just address the Affordable Care Act, Obamacare, in a pretty broad way. And the headlines that came out, and these are the myths. It's really we're attacking the headlines that you see. And this widespread headline, which was Obamacare is killing 2 million jobs.
That not just killing, decimating,
yes.
destroying, crushing.
So Max, what's happening to these jobs?
What's happening? Well, Obamacare is not crushing these jobs. If you check the Washington Post fact checker, which I think does a pretty good job of being honest, they awarded coverage around the story 3 Pinocchios. So there's been some widespread kind of inaccuracies about it.
Yep.
Here at the Motley Fool, we are not political. We're very neutral, and we just try to digest things and put it in context for investors and for our own knowledge. But if you actually go into the CBO report, read what they say. Here's a direct quote: net decline in amount of labor that workers choose to supply rather than from a net drop in business demand for labor. So employers will not be cutting jobs because of Obamacare, but employees may be reducing the number of hours they work in order to get subsidies. And the 2 million is derived from the number of hours that employees are projected to reduce their working hours by.
Yep, so if you have potentially older people who couldn't get insurance on their own in the individual market, they had to be an employee, maybe, I don't want to pick on any company here, but maybe like in a Walmart greeter type role, that type of person might no longer need that work, so they're going to retire. which would then free up the job for someone else. So it should actually reduce probably unemployment overall. But yeah, you're right. Hours are going down because people won't feel compelled to work in these specific jobs only for the insurance they can get through these jobs. So,
right. So I think employees will just have more options, a little bit more flexibility in the way that they get access to.
Well, and hopefully you'd end up with more enthusiastic employees who aren't just coming into work every day so they can get coverage.
Yeah, that's true.
All right. So our second big headline that we're going to myth bust, which is, we've seen this go around. It's Obamacare is a bailout essentially for the insurance companies.
Right.
And you know, it's.
Oh, you're referring to the risk corridor.
The risk corridor, of course. And so it's not entirely true. Now, there is a mechanism in place that could reward the insurance companies if the risk corridor is unfavorable to them. But the CBO report came out, and it actually showed over time the taxpayers will probably net about $8 billion. So it's actually going to be beneficial for the taxpayers, because if the pool is more favorable than the insurance companies expect, they actually have to refund the American taxpayers.
Right, in the form of a rebate.
Yes, but either way, it shouldn't be too material for your investment thesis on these insurance stocks. What's more important is that the risk pool is in pretty good shape, which it appears to be. That enrollment is going pretty well. The CBO report moved the enrollment numbers down from 7 million to 6 million, largely because of the bungled launch of healthcare.gov, but things have been moving pretty smoothly. So, you know, the insurance companies, you even saw WellPoint's CEO, originally a critic, now on board with the Affordable Care Act.
Right, and I was just going to say, as earnings start to come out from some of these insurers, you're going to see things like, you know, Aetna saying that it looks like a lot of the consumers that have enrolled are a bit older. The law depends on a lot of younger folks joining. But then you look at Humana, and it looks like the age is starting to trend lower. And keep in mind that earnings that are coming out now are from last quarter, right? So the end of December, which is the midpoint for the open enrollment period, it'll really be the first quarter of this year that will determine what premiums will be like going forward.
Yep, I think so too, and that's why listening to what the insurers are saying is so important, because they give you generally a better window into what's happening than just you know, governmental spin. Right. So it's always important to see the business side of things. All right, so Max, what are you watching going forward? Let's move into our watch list segment.
This is our watch list segment. Okay, I'm watching what probably a lot of people think is a boring company, but Sanofi. It's a big pharma company. It didn't have a great 2013. It lagged behind the broader market, and it's actually started the year in pretty poor shape, right? The stock is down, I think, more than 11%. Limtrada, its MS drug, was rejected by the FDA at the end of last year. So why am I watching it at all? Well, this could be an opportunity.
You like to pain watch things?
I don't. I actually, excuse me, this is one of the companies that I like the most in the big pharma space. It's trading at a pretty reasonable valuation when you look at forward PE. The stock is down after its earnings report because, you know, guidance was lowered a little bit, profit is down. But remember, guidance is important in the near term. But long term, what a lot of people should focus on, in this space at least, is the pipeline and the strategic moves that the company is making. So Sanofi doesn't have any drugs going off patent this year. So it looks like they've done a good job navigating through the patent cliff. It looks to be a little easier going forward for them in this regard. And beyond that, management has been very forward-thinking, very keen on innovating. If you look at the partnerships Sanofi's had, it's been very impressive, right? They have a partnership with Regeneron that's been rewarding. They have a new PCSK9 inhibitor for the treatment of high cholesterol that looks to be...
And we've seen great results out of Amgen.
Great results so far. And they also recently announced a partnership with Alnylam to work on RNA interference drugs, which is a new revolutionary kind of medicine that could have a lot of promise for different therapeutic areas. So
Sanofi's been really good about courting the biotech industry and getting partnerships, I think, better than some of the other big pharmas.
Yeah, and actually the CEO, Chris Viehbacher, I saw a recent interview with him, and they posed the question, why don't you just acquire these biotechs and integrate the technology into your company? He said, well, that's a quick way, I'm paraphrasing, it's a quick way to destroy value that way. I think they respect the entrepreneurial spirit of some of these smaller companies. And I agree, it's better just to let them innovate, do things their way, and then go to Sanofi for scale. So I think the dip that we've seen could be a good opportunity, and that's why it's on my watch list.
So will you be able to get Chris V. Bacher to autograph the poster of him you keep in your bedroom?
No comment. So David, let's move on to your stock. So Sanofi is one of the biggest big pharmas out there, but I think yours is actually a very tiny company.
It is a very tiny company, but it popped up. I actually talked about this stock on the radio recently, and it had a bit of a pop there. But it's something I've been watching for a little while. I was actually challenged by, I don't know if our viewers out there also watch Where the Money Is, but Matt Koppenheffer challenged me to find a small cap healthcare stock that wasn't a biotech because he wanted to be able to understand what it did. So I dug around and I found Cambrex Corp, which is an API company. That stands for Active Pharmaceutical Ingredients. So it essentially makes the drugs that the drug companies sell you. And the stock has really good financials. It's gotten a little wonky over the last year because they had a big plant expansion, which I'll get to in a minute. But it generally has a strong free cash flow. It reports, it generates more free cash flow than it reports in net income. But what's really been exciting, and let me, before I move into that, actually, it's trading at 9 times past earnings. It's even cheaper when you factor in how it's growing. 12% in the last 5 years, but it's estimated for over 20% in the next 5. And part of that growth, I think, comes from this big client that they have that they haven't disclosed who it is. Now, the rumor out there is that the client is actually Gilead, and the drug they're making is Sovaldi. So as Sovaldi is taking off, and its launch, I think, is outpacing even some of the most bullish expectations. I mean, I've seen analysts now revising. I mean, we were seeing 5 to 7 billion in peak sales. It looks like potentially 5 billion in 2014 sales. I've seen an analyst predict, based on how quickly it's growing now. We don't know if that launch will be sustainable. We've seen, Vertex had a rocket ship launch as well, It'll be interesting to see the more that this sells, if it's $1 billion a quarter or not.
Now, David,
the more Cambrex it'll get to make. So,
if this rumor is true.
If the rumor is true.
I'm sorry to throw cold water on this, but
yes.
I'm not a big rumor guy myself, so I would be cautious on that front. And second, moving on to Sovaldi. Now, I'm a Gilead shareholder. So,
yes.
I think the drug is a great innovation in health,
but
we have to be careful anytime we face bullish estimates like
that. Oh,
right?
absolutely.
And things can change very quickly. If you look at like Vertex and the launch of Incivek, it was basically an overnight blockbuster. The following year, it wasn't. Things can change very quickly. There is competition from AbbVie, so we have to look at pricing and see what kind of market share Gilead can take. That being said, I think API manufacturers are interesting, and the stock on your watch list looks attractive.
Well, and it's on my watch list and not on my please go buy right now list, is because I'm waiting for their quarterly results. I want to hear them address this rumor if they can discuss the client now. Obviously, the drug wasn't approved at the last quarter results, so they said, PDUFA was upcoming. So hopefully we can actually get clarity. The stock may pop a little upon the news, but it's better, like you said, having definitive knowledge that this is the company that's making this drug, right, because then you can sort of model in what's happening as far as what's going on. But even without Sovaldi, I still like its underlying business. It's a cheap company, so it's one to watch.
Just a question for you. Let's say when they report earnings, it turns out to be a completely different drug. Let's say it's not Sovaldi. What do you think the stock's going to do in that case?
Oh, it'll probably go down. It'll probably go down. But I think that makes it more interesting because it's still, even with the Sovaldi hype, I still think it's cheap.
Okay.
So without that, if it sells off, fine by me.
Right. And again, that's why it's on your watch list. Right?
That's why it's on my watch list.
Makes sense.
All right. Well, thank you for watching Market Checkup. We'll be coming to you every Tuesday and Thursday. For Max Macaluso, I'm David Williamson, and Fool On.